Good morning, it's Jeffrey Cohen, President and founder of U.S. Advanced Computing Infrastructures, Inc. We're a quantum computing consultancy whose first application of our model was in portfolio optimization. And so we run a model that looks at all stocks that trade in the United States, and we apply a very intense data validation process. We get down to, let's say, 2,000 stocks, and then we run them all against each other, and we find the best portfolios. We also find the worst stocks. So if you're interested in the worst stocks, the ones to avoid, or the best stocks, the ones to buy and hold as a portfolio, you've come to the right place. So we're going to talk today about the markets and, where are we going? And are we still risk off? And what does it mean? So just to start off with what we're following, you can see the S&P 500 is almost up to the SPY, which is the ETF. It's almost up to 400, which is up this morning, and it's up from I think 395 where it was on Friday. It's actually doing really well, and a lot of the kind of the dog star stocks that we follow appear to be strong today. It appears that speculative interest is up today. So the question for us is, does it make sense with what we're reading, with what we're hearing? Does it make sense that markets are looking strong? So the first thing we're going to do is share our model run and see if there's any insight here. So the first is the variance of the S&P 500 has not changed in a very long time. It's elevated, but it hasn't changed. The expected market return. You've got markets that are lower and they're not expected to go much higher in the next 1 year. 8.5%, 8.6, not bad. Not bad return expected. That's about 7% capital gains and 1.6 on the dividends. You can argue a point or two either way. It's fine. But no one's telling me the market's going to be up 20%. People are thinking more like, a handful of percent. And so we go through the model. Of course, we still include now the international stocks. And you can see there are plenty of international stocks that are listed in the U.S. Some maybe are a surprise. Willis Tower, right? They're the ones that have their name on the Sears Tower in Chicago. Actually, a UK firm. UBS Group. We all know UBS Bank, Switzerland. So these stocks are very, very well known, but there's others that are maybe less well known that are out there. And so Stone Co. Limited, which was a meme stock in the Cayman Islands, STNE. So we came out with 1,632 stocks. The variance of the stocks that passed their data validation, and this is primarily $2 billion in market cap or up, equity market cap only, no debt. And you got a 2.8. The variance of the S&P 500 is 2.5. If you look at the kind of the big money stocks, they're 2.8. And the overall expected return of these stocks, of the 1,632 stocks that we've concentrated down to, without a lot of our own theoretical improvements, right? You're 2.8. Some things that are important just to notice, right? So, and we're going to get into the whole, is the market going down, is the market going up, and all that, and what stocks to look at. But just to start with a foundation. Adding ETFs to your solutions tends to make them better. So what that means is if you have a chance to invest like in the S&P 500 and a bunch of stocks, you do better. Adding bonds and commodities to your, I should say, portfolio makes them better. Okay. So this is equity ETFs to your portfolio. It just makes them better. Not tends to. It makes them better. And adding bonds and commodities to your portfolio makes them better. And that's via ETFs just because they trade and it's easy to manage. And so those are important things, right? So we're not including those right now in our model. We're just looking at stock portfolios. But you can always add. And the best stocks to hold are really low risk stocks. They're in some cases household names. A lot of Canadian firms. Canadian firms, I guess, don't have the volatility. We had taken them out before. And look at all these international firms. So we talked about Willis Towers. Right, Willis. Hey, how you doing, Willis? TELUS, international. BCE, Canadian. Sun Life, Canadian. Royal Bank of Canada, Canadian. You get the point. A lot of Canadian firms in there that are improving your risk return. The worst ones, Madrigal Pharmaceutical, my guess is that's being memed. Prometheus, AMC, Farfetch, Snap is a particularly rough one. Coinbase, Lyft, Grab, Wayfair. These are valuable stocks, $2 billion and above, but with tremendous risk versus their return. Affirm Holdings, GameStop, Peloton, R1 RCM, DraftKings. These are all stocks that we've talked about over the year. A couple years now. Peabody Energy, Stone. Remember we talked about the meme stock Stone out of Cayman Islands? So these are your worst ones. Roblox. I actually like Roblox as a platform for the kids to play on, but I don't know that I like it as a stock. Just interesting, right? So that's who we are in the market. Excuse me. I'm going to take it off screen. I'm going to take a look at the solutions that were picked. Wow, that was something. Yeah, this is nice. I'll show it to you. Here's the two best stock picks. I actually show the 25 to our clients. The first one has 32 stocks. The next one has 33 stocks. So that is less than before. Before we were at 40 stocks. So it's a little less risky, which is great. So maybe people are taking that as an opportunity, like to buy up the S&P 500. Hey, the models are a little less risky, but it doesn't mean that they're risk off. It just means they're a little less risky. It's still 32 stocks, but you can see the strength in the indices. They're being bid up today. And that's important, right? Because I'm not sure that a 4% expected market return to risk, this is net of risk-free, is worth it. It's worth it for your hard-earned money, unless you have to be in the equities market, and then go for it. But I would say if you don't have to be in equities, you should be moving some of your money to bonds, some of your money to risk-free, some of your money to U.S. Treasuries, to I-bonds, savings bonds. A bank account, an MMA that earns 4.75% or 4.6%. It's okay to put some money aside and just earn the risk-free premium. So that's what we see, right? So then the question is, where are we now, right? I'm looking at stocks that I follow, and they are just, there's a lot of stocks that are like in the toilet. But if we look at, again, the best stocks that we had picked in our model, and by the way, we have not simplified our model down, so we have not eliminated a lot of the data that we plan on eliminating soon. So the question is, where are we? Freeze the header rows. 3 header columns. By the way, we are not investing in the market right now. We are not playing. We are not trading. So you might argue that we are just talking. But we're not playing right now. This is not a good place for us to be. And so, by the way, you look at the best stocks, and some of them have negative net income. So we're going to talk about that, right? Some of them have negative net income. Many of them have negative AOCI. Let's just highlight if they're negative. It just helps, right? Because if it's less than let's say, $1. Add a rule. Done. So you can see Berkshire Hathaway is an icon, paid a good, healthy dividend. They're worth a lot of money. We're going to take all these to easier currency to buy, to look at, an actual currency view. By the way, if you see 9, 9 is the error number. There we go. That's nicer. So we're going to take a look, right? So Berkshire Hathaway, negative net income as his icon. McDonald's, interestingly enough, made $6 billion but lost $2.5 billion. Willis Watson made $1 billion, lost almost $3 billion. This is making my back hurt. It's giving me a lot of stress and anxiety. McDonald's has negative common equity. Otis Worldwide, the elevator company, has negative common equity. Yum Brands. What is up with negative common equity? That means they have more liabilities than assets. They've lost money. They've got tons of debt. They're still able to maybe support their debt, but PPL. I don't like it when a stock that I might want to invest in has negative common equity. So let's take a look at all of them. Let's sort them ascending. Boeing. Now there's no surprise. I got problems with the airplanes. But Lowe's, Philip Morris, Starbucks, why would they have negative equity? Oracle, Altria, Domino's Pizza, Constellation Energy. So that's not a helpful thing. And in fact, when you look at Boeing, they're off-balance sheet losses. I shouldn't say off-balance sheet. Not included in net income losses of $9.5 billion. On top of $5 billion loss means Boeing is just bleeding. It's bleeding. It's bleeding. It's $51 billion in debt. Cash flow is $3 billion. That's awful. That's just awful. It's worth $118 billion. It looks like it should be worth $0 billion. This is really rough. So there's a lot underneath the scene here, and I don't think we're done. I don't think we're done when it comes to pain, right? Net income. Let's look at stocks with negative net income. Teladoc loses $10 billion. Who loses $10 billion? $200 million in cash flow. Market cap is $4 billion. They lost $10 billion. Now, unless our data provider is just feeding us garbage, this is terrible. Carnival Cruise Line lost $9.5 billion. What did they sell? Boats for a nickel? AT&T lost money. Ally Financial, Boeing, Carnival or Norwegian Cruise Line, Grab Holdings, Peloton, Coinbase, Robinhood. Big money losers. Kyndryl, Services Company, Ford Motor Company, another Royal Caribbean. So be careful when you invest in stocks that lose money, because these are going to be higher risk, and you got to have a lot of belief to invest in a company that loses money. So that's just interesting. So you get this spreadsheet every, when you buy a run. You just get the spreadsheet. And now you can do your own little searches and seeks and scans. I think it's great. So what else were we looking at? We were looking at a lot of things this morning. I got a couple of stocks here I've been tracking. So the IWM, which is the Russell 2000. These are not stocks that we own. These are just indexes. So the QQQ is NASDAQ. The SPY is the S&P 500. IWM is the Russell 2000. Then we got a bunch of stocks that we watch. What's interesting is some of the stocks that we think are just, bankruptcy risk, troubled stocks are down today. So the stocks that are not doing well continue to not do well. And so what that tells me is if I've got a few bucks that I want to put in the market, there are downtrodden stocks that you could invest in that are not bad. So let's take a look. What is our Twitter feed looking at? Not much. I ordered 3. Cleveland Cliffs price increases. So steel is going up in price. There's nothing here. There's nothing in Twitter. So let's move on. What are we looking at in the markets? So the futures this morning were up. You can see the equities were trading higher. The VIX is lower, right? Gasoline is flat. Natural gas is up a little, which is interesting. Silver. Now, this is interesting that silver continues to fall. So we see this as a very important number. That silver and copper. Copper under $4, silver under 21, we think are important. The dollar has dropped a little bit, but has been strengthening. A strong dollar means weak equities. A weak dollar means strong equities. So when the dollar goes down, it is pretty good for stocks. You can see the market just popped up higher. People are making risky bets right now. Why are they doing it? I have no idea, but let's take a look. So I've got a whole bunch of screens here set up. So let's take a look. The Hang Seng yesterday. Hang Seng is the Hong Kong markets. So Chinese company with a little bit more of a Western flair. Take a look at it for a year. There it is. So it dropped in November, and it basically recovered all the way back by the end of January, and now is coming down again. I can't help but think this is just a wave function, up and down and up and down, and I don't really understand why it would be slower down and faster up, and probably slower down and faster up. It just doesn't make much sense to me. So let's take a look quickly at bond yields. You can see the 10-year at 391. You can see the 13-week. I like to look at ultra short, ultra longer. So 391, you can see how you're up at the top of the Bollinger Bands. So there's a trend higher, right? Normally it pops out of the bands before it corrects, but this one popped out of the bands for a long time. And so we're looking up on long-term yields. When you look at, this is a chart that we drew. I don't know that we're right on this one or not, but we could always bring this down a little bit, but you take a look at where we are, and your short-term money is definitely trading more and more expensive. This is your risk-free rate, true risk-free rate, 13-week Treasury. Who can't put their money away for 3 months, right? And if you were willing to put your money away for 3 months, look at how much you benefit. And look at how the increase in that benefit. All right, world indices. This was something I thought was important when I was looking this morning. Your Chinese indices are all down. Aussie's down. India's down. Europe was down, but Europe is now up. And so Europe has decided to pop up higher with U.S. equities. So what's driving that? Don't know. So when we talk about how low can the market go, because that was the original thought of our video. How low can it go? And honestly, I mean, it can go wherever it wants. It's recently been as low as 3,600, then 3,800, then 4,000. It's possible that we're going to pop back up. And this thing doesn't go much lower at all. But, you know, our trend line said that the market broke out into February, early February, and then has come down. I see no reason that it can't hit 3,900. easily go down 100 points, which is 2.5%, which is one bad day. 3,800? Sure. That's 2 bad days. So 4,000 to 3,800, right, is 200 points. It's 5%. Could easily fall 5%. Then we look back to the last support, which is 3,600, which is down 10%. I would say my crystal ball, if I go to a weekly chart, I would say 3,600 is not a bad place to draw the line. Draw the line right here at 3,600. And say we're probably going to touch that line before we recover. And God help us, if we fall to 3,600, I see that there's a pretty fast, a fast way to recover here. If we were to fall to 2,800 or 2,750, yeah, then we've got a real big move on our hands, right? Then we've got chaos and mayhem. But it wouldn't surprise me if we hit 3,600. That's a 10% drop before we go up again. And that's because a lot of the stocks that we're following are just, they're not making money. They're worth a lot of money. They're not making money. So these are stocks that we like to just look at. These are recently viewed. These are not picks per se, but recently viewed. Hang on, I'm taking you off screen for a minute. Let's go to recently viewed. Nope, I can't go to recently viewed. It doesn't show up in that selection. So let's go to well, let's come back. So you can see the market popped up higher, but is not really holding the gains. So I think we're calling 3,600, just so you know. Get rid of that stuff. That's not... So where are we? Jeffrey, where are we? These are banks that a while ago were highly valued. We've actually been updating our analysis, but have not plugged it into Yahoo Finance yet. And you can see that the regional banks, all trading higher for the most part. Dollar is slightly lower, yields are lower, interest rates are lower, banks are higher. So banks that normally like higher interest rate because they make the spread, no. Leptokurtic and low variance. Now this is an older list. Hasn't been updated in a while. There's your stock that moved. TGNA. This is your leptokurtic story. I want you to think about this for a minute. It dropped 23%. It's leptokurtic. So what that means is leptokurtic stocks have a fat tail. This is a fat tail move. This is your leptokurtic nightmare. Platykurtic, I wouldn't expect to see the same 24% decline. I see a 1% decline. I see a 1% advance. Platykurtic stocks are safer because they have flat tails. Okay? So there's your story right there. Leptokurtic, platykurtic. If you wanted to avoid a nightmare, you would say, Jeff, let me take a look at those leptokurtic stocks every day. Oh, there you go, TGNA. I probably shouldn't be holding that as a core holding, or I should be hedging it. If you hedged it, you'd be making a fortune right now. Talked about the banks. Talked about the Hang Seng. The Hang Seng is now dropped below its 1 standard deviation Bollinger Bands. So it looks like Hang Seng is starting to correct. Treasury yields for the 10-year are advancing. Now, it's not quite hitting 4%, which is surprising to me. I have my own personal bias that says that interest rates are going up, but it doesn't matter what I think. What matters is what the tape says, and they are trending higher above the Bollinger Bands. There's momentum in 10-year treasuries. There's momentum right there in 13-week treasuries. There's a lot of momentum in 13-week treasuries. The rates are going up. My guess is that when the FOMC meets again, the Federal Open Market Committee, they're going to raise rates. Risk-free rates of return are going up. That means risk-adjusted returns are going down. If the stock market were to stay exactly flat and interest rates go up, the stock market future expected return goes down. Now, if the future expected return goes down, you don't want your money, fresh, new money, in stocks. It's silly. Your expected return goes down on a relative basis. You want to put some more money away and wait until good times are coming again. Now, you might say, Jeffrey, 4% now could be 8% later. That's fine. But don't think you're going to catch a falling knife and catch 4% and sell at 4.25%. That's all. Take a look at cannabis. Talk about a high-risk market. They're not even allowed to use credit cards or banks. It's mixed. We'll go there. Mixed. Steel and mining. One of my favorite industries as a patriot. Steel is very important to the war effort. Cleveland Cliffs is up 4%. Stelco in Toronto is up 3%. U.S. Steel is up 2.5%. Steel Dynamics. Is it Timken? Yeah, Timken Steel is up 2.3%. So, Reliance Steel is up almost 2%. Nucor is up 1.5%. The U.S. steel industry is trading higher because steel prices are firming. That's a very cyclical or even counter-cyclical trend there. Chips and dips. Computers, chips, and telco. These are B2B. You see a little bit down. Lumen really crashed. Nothing's really up. So B2B is not anything to talk about right now. Let's look at retail. How are we doing on retail? So I am not in the market right now. I am not trading. That's why what I would say is you're following a more academic approach right now looking at the markets. We are not in the market. We are not putting money at risk right now. We believe the market is risk off, and we are following our... we're sticking to our knitting here, which is we're working on our software. We're working on our models. We're working on just learning more. What about the Russian war? What about the U.S. economy? What about interest rates? So that when it's time to get back in, we can get back in with a lot of confidence. But for right now, no thank you. So when Joann Fabrics is up 3.3% and Kahn, which is a furniture retailer, and Grow Generation are up the most, and Etsy and Bed Bath & Beyond, I don't even understand this market. The Container Store's down. This is a market of crazy stocks. So nothing really happening in retail and the large caps. Chips and semiconductors. There's a momentum trade right there. All positive. So the market right now, I told you, it swung Europe higher. It swung the U.S. higher. Momentum stocks like chips and semis are up. I don't really care about trucking and transport. Let's look at the highest beta stocks. This is as of now a few weeks ago. If you buy our run, you get the list of high beta stocks every day. Every day. You can have it. You can plug it in. You can look at it. You can be like, oh, look at that. If you really want to play this market, you play the high beta stocks, you make the most money. Right now, market's going up. Your low beta stocks are up too. That's very interesting, including an exceptionally Taco's Energy Navigation Limited. I have no idea what they do. Fikes, tankers. So tankers are up. I think I read somewhere that Russia is shipping more oil out of their Pacific terminals, marine terminals. I gotta tell you, I identified those, published GPS coordinates and photos right at the beginning of the Ukraine war. Those Pacific terminals should have been taken out of Russia a long time ago. They were very soft targets according to satellite imagery we were able to obtain. Current relevant satellite imagery said that Russia's Pacific marine terminals where they export oil and gas were soft targets. You could have taken them out. You could have taken out Russia's war effort, the ability to fund their efforts. So now, unfortunately, right, the shipping company's looking great, got plenty of Russian oil to ship. No thank you. No thank you. Oil, gas, and pipeline. So unfortunately, I do have a bias. I am an American. I'm a lover of freedom. I do not like the Soviet Union. I do not like communist Russia. I am reading this book right now, and it just brings me such despair. Such despair to learn about where Putin comes from. There are books that I've read. So I'm 1/8 Russian, right? So by heritage, we're like 4th generation Americans. I think we came over 1890s to 1910s, thankfully before the Holocaust. And so it was not a good place then for Jews. It's not a good place now, and it was not a good place during the 60s, 70s, and 80s when Putin, was a young man, right? And so to read about him, there were books I've thrown out because they disgusted me so much. I studied Russia, I studied Nazi Germany very extensively growing up. I got to tell you, it curdles my milk. It turns my skin. It gives me a rash to think about Russia. It makes me disgusted. The problem is that I love America so much, and I know there's people suffering in Russia, and I wish to the Russian people, I say this: leave. Come to America. Come to Europe. Go to Israel if you're Jewish. Go anywhere. Don't stay there. It's not a safe place for you. It's not a good place. Communism is not helpful. I would rather you go to China and work in the cities of China than to stay in Russia. It is so unsafe in Russia. Such history. And it's such a tragedy. It is like a Shakespearean tragedy to be Russian. And so I understand. I understand why you don't smile in photos. I understand why you don't want the government to even notice you. Do you know I was reading a statistic? Again, I don't know if it's true, but it's cited in the book. 90% of indictments in Russia were followed up by convictions because it was seen as anti-Russian, anti-Soviet for the state to have been wronged. So if the state charged someone with a crime, of course they were guilty, because if they weren't guilty, the state was wrong. I'm sorry. I'm a patriot. I'm an American. So I want American oil. I want European oil to do well. I want European and American steel companies to do well. I want us to be able to it's not a land thing. It's an ideology. I want democracy and freedom and capitalism and the liberal economy and the liberal media. Even though sometimes I can't stand the liberal media and all the crap we have to put up with, I love it. I love it compared to a state-controlled media. And so I can't help it. And so I look at things like oil and gas, I look at things like steel, and I want the steel companies to do well. And we take a look, and there you are. Steel is up in the U.S. Yay! Go steel. Takes a lot of steel to make a tank. We talked about high beta stocks. Let's take one last look. And again, I need to update all of these portfolios. I do it for the clients. So if you were to buy our run, you would do a search, and you would say beta. And you would see right now there's only 2 negative beta stocks left. What's happening is that the stock betas are normalizing. The stock market is normalizing. You would see dividend yields There are stocks that have paid over 10% dividend last year. That's crazy talk. Let's take a look at other betas. High beta stocks. Affirm, MicroStrategy, Wayfair, Coinbase, Unity, Farfetch, Block, Asana, Cloudflare, Confluent, GitLab. These are stocks that are just moving aggressively. These are the bets. These are the low quality, high leverage bets on the market. And nothing wrong with them. If you like this kind of risk, this is where you get it. Datadog, Caesars Entertainment, Bumble, NVIDIA, DoorDash, AppLovin Corp, Roku, Roblox, Mercado Libre, the e-commerce company, Peloton, MongoDB, the Trade Desk, which is an advertising and a third-party seller, Shopify. So your new economy is trading really aggressively. GitLab, Coinbase, Wayfair. So, okay, that's your high-risk play right there. There's your high beta. And if you think the market's going up, you want to be in those stocks. So you have all this if you want it. You want leptokurtic? Every day. Here's you're down to 7 leptokurtic stocks. Now, if you look at, so 7, okay? Remember that number, 7 leptokurtic stocks. You look at our list, and our list is much more than 7. And that's because we ran it and we published it a while ago. Now we're down to 7. The market is normalizing. Isn't that interesting? There used to be 20 of those leptokurtic stocks. 25. Now, there's 7. Platykurtic, there's 16. How many platykurtic were there before? Holy cow. Looks like it's about 35. So, you buy the run and you find out, holy crap, the market is becoming more normally distributed, at least for stocks with $2 billion market cap and above. Okay, but these are still pretty big market caps, and these are still acting in a strange manner. Non-normal distributions. This is the fourth movement, or I would say the fourth derivative. Skew, third derivative. You got a few of those. Wouldn't you like to know the high skew stocks? And if you were to ask us, hey Jeff, you're running a 1-year skew. That's a very, very persistent skew. Negative skew, 4 stocks. Let's take a look. How many negative skew stocks were there a month ago? That's negative beta. I'm sorry. Hang on. I know I have to touch the button on each of these. Hang on. NASDAQ doesn't like me having them running if I'm not looking at them. They make a big deal out of it. Big dealio. By the way, the NASDAQ book viewer, it's a very good way to follow the way a stock is trading, the depth of the interest in the stock. And what I would say, just to be thoughtful, is it's probably worth it to pay for certain data sources to get that. And so, you know what stock looks strong right now is Credit Suisse. More buys than sells. And strong. And it's up. It's up by 3%. But even without looking, I know it's up because of the strength of the buys. Now, they're trying to say, oh yeah, I'll sell you a couple 100,000 shares, but I don't think anyone minds. I think they're going to just run right through it. Credit Suisse looks strong today. That's all. Not a big deal, but just something for you to be aware of. Credit Suisse looks strong today. A stock that I hold and that I own looks like crap today. No interest. Boring. Boring. Boring garbage. All right. Any questions out there? Anyone want to say anything? Ask me anything. All right. So what else? So we talked about that there's fewer non-normal distributed stocks as we go to the $2 billion market cap, but also I think now the market is more moving uniformly. It's more, I almost would say random, maybe because there's less hot money going into individual names. Like we look at high beta, greater than 2.2, there's a lot of those. But when we look at high beta in our run, over 2.2, no, there's still a lot of them. Look at that. There's, holy crap, there's 36 high beta stocks. So the market is trading at the edges, right? So investors are more risk on at the edges, but the market is risk off. So what that says to me is it's like the Roadrunner and Wile E. Coyote here. That's what I see. You know, when the market stops, again, that's too small. Yeah. It's just coming off a cliff, right? And that's the problem, right? So when the market starts to act like it wants safety, look at how it's flatlined. And when you go back, and this is on a weekly chart, so from a weekly basis, we are down and then flat, slightly rising. Slightly rising. Don't be negative, right? But you can see it drops, it comes up. It's like a smaller wave. But in this market, would you expect to see so many high beta stocks? So much risk? So I don't know. I don't know what this means. But what it means to me is this market's got more fuel. There's more fuel to burn in this market. And so I'm going to wrap up. I'm just going to do a quick scan. This is what I would normally do. So if I'm turning off the video right now, this is what I would do. First thing I would do, I'd probably get some more coffee in my cup. By the way, I love my wife very much. I love you, Diana, to the moon and back. You're the best. Coffee's right here. So at this part of the video, you could feel free to leave. I'm just gonna walk through what I look at to see if I'm gonna, make any money today, make any trades, right? Where are we at? This is the Jeff model, right? So I might look and I might say, what are the stocks? I traded a lot of volume yesterday. Linda. So that's gas, compressed gas. Luminar. So a lot of these I don't know. So on Friday, Linda, PLC. Domino's. I love Domino's, by the way. It's so high in salt. Morningstar. Financial services, right? Financial information. So Morningstar traded. Let's take a look at that. It's a lot of crap here. So let's look. Morningstar. Over 5 days, it fell off a cliff. Holy crap. They must have did a dividend or a split or something. That doesn't make any sense. So Morningstar, high volume, fell off a cliff. I don't know why. I just know that it did. Linda, LIN. On Friday, tons of volume. Linda, 5 days. It climbed a cliff. 320 to 340. Okay. So it's one down, one up. Depends what you're looking for, right? Transalta, I know. Live Nation. Let's look at Domino's. DPZ. I had heard through the grapevine that DPZ didn't do so well. Their sales were down. So look at that. Thursday it dropped. Friday, tons of volume. I think because people like the Domino's business model. That's interesting, though, right? So you look and you got some stories now, right? Hey. Call up your buddy. Hey, hear about Domino's? Yeah, the cheese. They got the cheese. Haggerty. I use Haggerty Insurance. HGTY. I am a policyholder of Haggerty Insurance. So why did they fall? Or why did they not trade very much? So if you look, price has been dropping a lot. Not really trading though. So the question is, what's going on with Haggerty? I like Haggerty. I like the insurance. It's fine. Not going to say I've even used it. I've not had a single claim ever. So they're making a ton of money on me. A lot of profit. Avis, Car, UBS. So these are not trading. Avis is not trading. UBS is not trading. Dick's Sporting Goods, NCR. And these are not trading to an amazing degree. Rockwell, Petco, Spirit Airlines. Why aren't they trading? American Eagle. Why are they not being noticed anymore? I don't know. But we looked at Haggerty is lower on low volume. Let's look at Avis, Car, and then we'll look at UBS. So Avis was down into Friday. So on low volume, it really wasn't moving. It was actually falling. So in this case, a stock like Avis needs volume to keep its price. Low volume means it probably falls further. Maybe there's a lack of core holdings. Look at that. Over 5 days, UBS on low volume was falling. But then it pops back up again. So you would look at these and you would think, okay, low volume Friday, odd, Dick's, DKS. By the way, Dick's Sporting Goods, I signed up for their feeds. They're always running a sale. If you're looking for stuff, you can actually buy really good sporting goods, not cheaply, but you feel like it's cheaply. We got to look further. Yeah, so Dick's has been falling, and on Friday it was low. So the question is, same thing. On a low volume day, these stocks are going to fall. As the market falls, these stocks will fall more, maybe. These stocks require support for the current price levels outside of the institutional holders. That's interesting to me. These stocks are interesting. So Morningstar, Linda, and Domino's had a lot of volume on Friday, and each of those has a story worth looking into. These were low volume. Low volume, Doghouse, Haggerty, Doghouse. Not necessarily Doghouse. So Haggerty's a Doghouse. Avis has been up and down and up and down. It looks like people are just making a lot of money on the up and down for Avis, which tells me that it's memed and it's high volume and they're playing it and all that good stuff. I don't know. But it probably falls, Avis, if the volume drops in the market. We look at UBS, again, a lot of up and down, a lot of speculation. And look at that now, 50 cents. And then Dick's Sporting Goods, flat as a pancake. Low volume, settling down. So, okay, that helps. That's something to look at. What else would I look at? So the two negative beta stocks, I love negative beta. Did you know that Chicago Quantum is home to the negative beta stock index? I don't know if you know that. I know that. Here are the two negative beta stocks. What's interesting is the market's up and they're up anyway. So negative beta, my ass, people just want to be in these stocks. They're happy to buy the insurance today. It's probably what they're thinking. I'll buy some anomalous negative beta stocks because it's good right now. So, all right, I'm fine with that. Understood. What else we got? I don't really watch porn, so I don't really have any of that up. So, here's my channel, if you're interested. 334 subscribers, and I don't know, not much going on. My website, it's got a fair amount of views. Daily views is 74. All right, not bad. I've been working on it, actually. Let's get rid of some of this stuff. Here's our website, by the way. Every once in a while. So look, we are learning speed in our analysis. I'm working on making, typo, the run go faster without giving up value. I am still working on that, but I haven't been coding. I've just been designing. No idea what all this means. There's nothing here. It's stupid. Let's see what's trending. What's trending? Russia's collapsing. I don't think so. Bakhmut. That's interesting. Reagan. Belarus. Snorlax. That's a Pokemon thing. We can look at Bakhmut. Okay. Okay, a lot of death and dying. Not interested. Bakhmut is not a safe place. All right, that makes me feel bad. I don't want to see that. A proposed takeover. Mississippi. What's going on in Mississippi? It's just class warfare. Stupid. A lot of storms coming. We had rain today. Rain in Chicago. A lot of rain. This is just garbage. Moldova. That's interesting. Transnistria. So the problem is that Russia probably makes a play for Moldova, which they shouldn't do. It's mid-afternoon. Infantry fighting vehicles. It's awful. I guess it's better to fight them there than here. That's so interesting. Ukraine's commander of joint forces has been fired. Edward Mikhailovich Moskalev. Been fired. Okay. It's pretty rough. I sure hope China doesn't get involved. Really hope not. Really hope not. Yeah, this is interesting. I got to read this article. If I'm going to keep investing in Corbis and having at least to me, a material position, I need to understand Nectin-4 expression on solid cancer tumors, because that's actually important to understanding Corbis as an investment. Solid tumor expression of Nectin-4. So we go back to high beta. And we see that high beta is a good play today. A lot of people are piling into the same risky trades. That's awful. Actually, I hate to see it. Platykurtic we talked about. The banks. I do like to look at the banks. I always liked it because it's a real Main Street play, and I also have a good interest rate view here. I can't believe that long-term rates, the 10 years down to 391, down 1%, down 4 basis points. And you can see Cullen Frost up to 130. Okay. We know the Hang Seng. The 10-year is coming back. Wow, look at that. Popped up. S&P 500 is, you can see it filled that gap right there. Just popped up. Popped up. It's been down, 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 and it's coming back up. There's no reason to believe that the S&P 500 won't keep going up or down or up or down or whatever. So it's fine. So I start getting lost is what happens, right? Like I'm running through. So anyone out there? So go ahead. Ask me anything. So is there anything interesting in this news, right? Not much. The whole Goldman Sachs consumer ambition fails. I still have a bank account with Goldman Sachs. It's not bad. You know what? It's nice to be able to say Goldman Sachs. Oh yeah, I'm a client. I got a bank account with them. Oh yeah, I got about $200 in it. Bitcoin, 23.8. That's crazy. It's really high. The euro's at 106. I can't believe stocks are popping higher. There's no good news. It's not like there's any news. This is just a bet. It's just a bet. It's just a bet, and I don't like it. So I'm done. I'm done. This is a Wile E. Coyote situation. We're cliffhanging here. We talked about some of these stocks. Yeah, this is tough. Tough bet on that one. So yeah, so that's where we're at, right? Maybe you feel like, you could have bought that platykurtic stock, right? But remember, leptokurtic means fat tails. It means there's a much higher probability over the past year. Well, there's a much higher actual over the past year 2, 3, 4 standard deviation move than you would expect in a normal distribution. And Tegna was one of the stocks we identified to our clients as having a fat tail, leptokurtic, low variance leptokurtic, the ability for a really bad surprise. Could be a good surprise too, but it could be a bad surprise. And here it is today. Bad surprise. So that's helpful. Leptokurtic. Big surprises. All right. Thanks for watching. If you liked the video, hit subscribe, drop a comment. We appreciate it. We're not paid to make the videos. No one's telling us to make the videos. We're not pumping our own stocks in the videos. We're just here to share what it is we do. And if you'd like to learn more, go to chicagoquantum.com. This is our website. And if you really want to learn more, read our brochure. You learn a lot. By the way, I've updated the brochure and I haven't put it on the website, so I need to do that, but that's okay. So thanks for watching. You take care now. Bye-bye.